My guest today is Barna. Barna is the co-founder of Malda, a decentralized lending protocol for individuals, institutions and protocols, anyone who needs DeFi, anyone who needs to access financial services. Welcome to the show, Barna.
Hi, nice to meet you. Glad to be here. Thank you for inviting me. Hello everyone. Barna, one of the co-founders of Malda, which is a decentralized lending protocol, but it's also the first unified liquidity lending protocol serving access to users across all the Ethereum rollups with the same service, with the same depth of liquidity.
Yes, indeed. Very well said. All right. Well, just before we jump into Malda, it'd be great, Barna, if you could, introduce yourself again, I guess. Yeah, would love to just hear a little bit of your background. Yeah, I mean, what have you been doing in the lead up to getting involved with DeFi?
Yeah, good question. Good question. So, I actually come from like a business background. I actually studied business in university, but I started migrating towards technology during my master's studies, as that was a field that I was more interested in. So I was already working with machine learning for my master thesis and so on. At that time, I was really interested in AI. I'm still really interested in AI, by the way, but that's not the topic we are here for today. And after university, I ended up working in the Web3 industry. So I started off for doing ecosystem development for decentralized storage solutions and layer 1 blockchains, which gave me a great overview of the market in general and the participants of the DeFi ecosystem. And that led me to co-found with my co-founders Mandy Finance, which was it's still live. It's a decentralized lending protocol on the linear zero knowledge rollup. And when we arrived at the question of like how to go next, we started building a unified liquidity lending protocol to solve liquidity fragmentation within the ecosystem. So the way that we saw it, many upcoming smaller lending protocols, they start deploying on multiple chains. Now also the existing ones are also doing that, if I may say, as the major lending protocols in the space have been deployed to many chains. And in each chain, they run into the problem of bootstrapping enough liquidity to make the lending protocol initially feasible, as each market is completely isolated. And we saw that it doesn't really make sense. It would make much more sense if we at Mandy Finance could expand to different chains with the liquidity that we have already bootstrapped. At that point, we have bootstrapped around, I think our total supply was around 150 million. And that led to the creation of the new protocol Malda, which is quite different in scope. It's much more ambitious, but the goal is that once you have bootstrapped liquidity somewhere within the Ethereum ecosystem and one of the optimistic rollups or zero knowledge rollups, or be it on Ethereum mainnet, it's available for the users across these different markets, because that makes much more sense to us. The things should operate that way.
Yeah, got it. That does indeed make sense, Barna. All right. Well, so you said at the beginning, you talked about unified liquidity lending, right? So I think one of the problems in DeFi is liquidity fragmentation. Malda, you want to address this by creating, unified liquidity pools. So just briefly explain how you see that model enhancing efficiency across DeFi and maybe better than existing protocols.
Let's take a step back a bit. So my thesis on why generally in these last months, not this last months, but the months before, so like a last half year to 9 months period, where the industry and DeFi have been seeing strong growth. For a reason, Solana was seeing higher growth. And that reason was, it was just very simple to use Solana. And the Ethereum ecosystem had this fragmentation and lack of capital access. Each individual layer 2 had to bootstrap liquidity. And my thesis is that it's simply that we don't need to find these crazy ideas that all of the rollups are parasitic. They obviously contributed, but the system was not well designed. And just take a look at capital access. So a monolithic ecosystem has the advantage that the capital access within those protocols there was very high. So it was straightforward for users to navigate towards that ecosystem. While on the Ethereum ecosystem side, you had to make a decision. You had like a couple of great options, right? Like you could argue for moving your funds to Base or moving your funds to Arbitrum. But either one you do, you have the problem that your funds are going to be, I don't want to say stuck, but in terms of DeFi, in terms of blockchain, and when you start to consider the need for bridging, they are quite immobile. So you have, like, for example, that 7-day withdrawal period on optimistic rollups. And this is why we see that protocols like Malda are very, very important for the Ethereum ecosystem as a whole, because it enhances capital access within the different rollups. And when there are investment opportunities that require a large amount of capital quickly, our model with the lending protocol, where users can deposit and withdraw quite quickly at any of the supported chains, it's highly, highly useful. It enhances capital access, so it can foster this economic growth, which is a position I think it's very smart that we are positioning our protocol at that point. But it is also going to be very, very, very convenient for users, as they are depositing into a protocol with what I like to characterize as like least amount of commitment. And when they deposit knowing that when the time comes and there is a investment opportunity, it's going to take them with the zero knowledge proofs about 20 to 30 seconds. But in 20 to 30 seconds, they can withdraw their capital to Base and Arbitrum. That will unlock a new capital flow if there is a investment opportunity there, or on Linea or Ethereum mainnet. They can very quickly move their capital there, capture that value, use their borrowing power, or potentially, if they wish to do so, because they are more risk averse, just withdraw some of their funds. And on the other side, what is the nice thing about this is that this is finally supporting the whole ecosystem. So when you are supplying your assets, you can also think about it this way: I'm going to get access to yield, interest rate generated by users who are looking for investment opportunities on Base, on Arbitrum, on Linea, on Optimism, or on Ethereum mainnet. So it's a natural arbitrage capturing protocol in that sense as well. But this is the way to capture most of the market with the least amount of effort. Not everyone is on the technical knowledge, or maybe I would characterize myself, I'm of the technical knowledge to leverage bridging all the time. I don't have the time though to constantly be looking at investment opportunities, how to bridge there. Okay, then I need to withdraw the funds from here and move it there. It's tedious.
Yeah, that's a very good point. Part of that, I guess, user adoption strategy is, making it easier for the non-technical people. So if you've just described yourself as technical, Barna, but maybe not even yourself always having the time to figure these things out. Of course, for the average user, it's much more difficult to access DeFi. So one of the ways that you guys hope to tackle this is, of course, I guess account abstraction is the easy way to explain it. So how do you guys at Malda think about this, and what are you doing to just try and make everything a little easier and intuitive for the new users coming into DeFi?
Yeah, I like that question. I especially like that question because we have built this concept last year when we realized that even for the technical people, our architecture is putting an undue stress on their user experience. What I mean by undue stress is that if we just build a protocol which interacts from multiple chains, and we enable you to supply from 2 chains, 3 chains, 5 chains, maybe in the future 10 chains. So you can supply all of your USDC in one action, but that doesn't mean one transaction. It actually means 2 transactions per chain if we are building it in the traditional externally owned account experience, because you would need to approve and supply on each chain. So we realized that that is insufficient, and we also had the concept of passkeys, and then really doubled down on passkeys when we saw the UX that Infinex has built, which was a good signal that we are on the right track, and it also helped us find some quite nice ideas for the solution. So the problem for non-DeFi users is obviously that they are coming in, and I like the framing that is now within the conversation. You are receiving all of these pop-ups, and I like this simplification because obviously I'm aware of the problem, but I did not have this model in mind. But yes, like pop-ups are like one of the worst things if you think about like Web2. Whenever a pop-up was coming up, it's usually something like a spam. So I think there is definitely, that's a good framing, and that is definitely a negative connotation when someone is coming in, and it is of course very annoying that you have to sign in a different window. So we started building our global accounts, which I would also frame as Malda specific application accounts. So that's taking another framing from Vitalik's blog post last year, where he talked about this application-specific wallets, because applications require specific behavior and wallets are very generalist. And I also agree with that. And our global accounts are built in a way that you, as an account owner with your externally owned account, you delegate to a different smart contract account controlled by a passkey. This is important because with the passkey, we have a little bit more freedom, and we also put this delegation in between these two wallets. So the passkey owned account that is more responsible, that is responsible for the execution of the transaction, and then these are batch transactions across multiple chains, can only interact with the protocol contracts. So they cannot transfer the money from your account. It's an extra security feature as well. And of course, it's a slight complication on technical side, but for the user's point of view, it's quite easy as we deploy these accounts for them. So you delegate the access to your account on Malda supported chains to this passkey controlled account. And then with the passkey, once you sort of sign in, once you visit the website, once you visit the application, you create a session key. And during that session, via the front end, you are able to control the passkey owned account that you have, which you can use that on your main account, which could be a ledger. It could be very easily be a ledger that you store in your safe. So it stays very secure. But with that account, you can execute only orders on Malda. So that's very nice because the user doesn't need to worry about the funds being transferred from the account. And now that Vector is dropping, we have like a couple extra technicalities and complications for externally owned account. That now that Vector is going to be released really soon, it seems like end of month it's going to be released on mainnet and then on the different rollups as well. It's going to be a very nice and simple setup. So I approached it. I also want to answer your Web2 or new users coming in question. I approach it from the DeFi point of view right now, but for them, it's the same advantage. When they are coming in, they are out of the box going to deploy a smart contract account, which creates its delegation, and then it's the same flow. But for new users, the whole thing would seem like it's just simply signing in with a passkey. And then what they need to worry about is to that specific address, get some crypto, and then we can also support that more with nice on-ramp integrations. I see some very nice ones coming in the zkTLS space, where you don't even need to do any additional KYC. You can just use your Revolut account as the KYC account, and then use peer-to-peer on-ramping with low risk of breaking the law with counterparty risk, because everyone is already KYC'd.
Yep. Thank you, Barna. Thank you for that. Well, I hope, I mean, that will benefit everyone as DeFi becomes slowly more intuitive and accessible. What about Ethereum? If we go a bit wider in context, Barna, there's always a lot of debate happening inside and outside of Ethereum about what is the best of the multiple paths forward for Ethereum, particularly layer 2s can often face various issues, fragmentation, capital access issues. It just limits their ability to scale sometimes. And again, what we're talking about before just makes it harder for new users to be able to use them because of the multiple steps required. So how do you describe Malda's approach to this, like with zk rollups and unified liquidity? That I presume would help address these challenges. Yeah, how do you think about that within the context of Ethereum scaling?
Yeah, so actually I not really considering differences between optimistic rollups and zk rollups anymore, because while publicly it has not been stated, based on the information Morses that I receive, I think it is very, very likely that potentially even by the end of the year, each of the optimistic rollups will migrate to a partial zk or a full zk model. They have been at least putting a lot of resources into researching this vector. So long term, I think all of the rollups are going to be zero knowledge rollups, which is going to be very, very helpful for this capital flow because of this, for example, this removal of the 7-day period. So our approach is simple. Our approach is simply what the ecosystem sort of demands now, that the Ethereum Foundation creates native interop, which is going to be at least like 2 years out to create seamless native interop, in my opinion, end of 26. We also need all of the rollups to not just be zk rollups, but to be either based rollups, but even better native rollups, which is everybody wants it, as I hear, but nobody can do it because it's going to require a lot more research to move from this conceptual to production phase. So that's further away. And our approach is just, we have zero knowledge proofs right now. We are very soon going to have real-time proving. I believe, and if I'm quoting it incorrectly, apologies for that, but PreZero just said that they are targeting for June, 3 months from now, real-time proving for Ethereum mainnet blocks, which means sub 12-second proving times. So that's very important, because while you can create these rails and frameworks and standards, all of them are very helpful for our work, for native interop. If you are able to prove a block in real time or close to real time, you can build the whole thing from an application perspective. And that's our perspective. Let's use the existing tools and build an initial version of what that looks like when our capabilities improve. With better standards, our product will also improve. And my thesis is also that even if native interop is here, it's not going to be as fast. I think it's going to be dependent on the clock time, internal clock time of Ethereum mainnet, because that would act as a coordination layer for many of these steps. So if that is 12 seconds, or if that is 6 seconds, let's say they halve the block time, by that time that arrives, our solution with zero knowledge proofs would probably be sub-second, or something like that. If it's 12 seconds, I think it would be like 3 to 4 seconds. So just continuously, this approach is needed for better latency, and what is most important thing for users, lowest latency possible. So.
Yeah. Just anything else to add on zero knowledge proofs? You said that everything is kind of moving towards zero knowledge proofs that obviously provide greater security, scalability. Malda leverages zkProofs, obviously. And what will they enable in the future? What else is coming down the line that zero knowledge proofs help enable and drive? Barna.
That is a very good point, and that is a very good question as well. So yeah, as you kind of also alluded to, right now we are using zero knowledge proofs for interop, and then zero knowledge rollups have started using zkProofs for scalability. My opinion is that all future applications are going to be using zero knowledge proofs, and the next big revolution, so to say, in zk is going to arrive when applications internalize them fully for their operation. Because what is generally well known is that zero knowledge proofs are really great for privacy. In their current form, actually, they are not, because you need to create zero knowledge proofs client side for that, which is bottlenecked. And for me, what is the most interesting about zero knowledge proofs and zkVMs is that you essentially just outsource a lot of computation from the blockchain layer, from a layer 2, for example, to an off-chain computation, and you can do 100x of the calculations and the computations that you can do. And I also do believe that many of the applications right now in DeFi, let's just stick with that, and I think this is true for the other verticals as well. Social can also benefit from zk scaling, because they can create more complex applications that are very secure for users. But in DeFi as well, if you look at it, most of the innovative approaches, like for example also the AMM for Uniswap, was born because of constraints. So you were working with a lot of constraints, and then you had to pack everything in a very efficient way so that it can function on an EVM, and it can create these DeFi services, be that swaps, be that lending, or even be that derivatives. But those were always on layer 2s for a very obvious reason. 12 seconds are too slow for a derivatives protocol to function properly. And now that you have zero knowledge proofs, what this means is that you can move a bunch of these computations outside of the EVM, so you don't have the constraints of the EVM, you don't have the constraints of solidity, and it does have a lot. You can work with Rust, you can bring in a bunch of ML libraries that are zk friendly, and then those that are less zk friendly, you can probably bring that in a year and create more complex computations. I think that's like the next generation of the revolution. If you are thinking about it, fintech was beating TradFi because fintech was bringing in all these complex AI models to provide better services. So they were like early adopters of, and that was not even AI, that was of course more machine learning, but they were early adopters of machine learning for financial services. And then you had like these monolithic banks that were just standing still. I could tell those stories for a long time, but they were not adopting, they were not changing. And then everyone started using fintech solutions. Like I use Revolut still every day. I hope to use more DeFi-oriented solutions soon, but where I live currently, that's the best available option. And then DeFi is also going to start eating away the fintech, because it is even more innovative. It is providing a better security, because you can maintain self-custody, you can build services built on DeFi, maintain full self-custody, and that is better than any guarantee that any central bank would give you if it is built robustly. And then if you have to bring in these methodologies which enable more complex calculations and computations to provide better services, because one size fits all lending protocol services, they don't work. And that is also what we are targeting as well. Like our next development target is to move all of the interest rate calculations into the zkVM. And from that point onwards, we can maintain one global pool. So maintain this obsession with not fragmenting the liquidity, but then we can create strategy A, strategy B, strategy C. And what that means is that we can provide very unique services for very unique user needs, and then determine how to handle potential losses coming from that strategy, as a strategy could create like potentially bad debt, mitigate the risks as much as possible, but provide better services without fragmenting the liquidity. And I think that's going to be very interesting, and that's where we probably have another 5 to 6 years of development on the cutting edge technology sector, which me and the team we very much enjoy.
Got it. Thank you, Barna. All right. Well, as we start to finish up this part of the podcast, where are we at in terms of the journey from testnet to mainnet? What does mainnet launch look like? What does it look like after mainnet? I think your testnet was launched last month. Just to talk to us in terms of where we are on that product rollout journey, Barna.
Yeah. So I'm very glad to say, like, one of the main barriers to launch was that a scheduling, we could call it a scheduling issue. So matter of the fact was the protocol required a lot of work. We work with a very top firm in terms of auditing, very nice. I'm happy to give them a shout out because they're doing amazing work. And we haven't been able to wrap up the fixes on time for them to finish the original scheduled time. So we had to schedule another extension, a small extension, which we have already wrapped up. So now we are on the security side, on the audit side, on open sourcing, of course, the protocol at the time of launch. We are ready with everything. And then the second major rework that we had to do was during testnet, we received 1.5 million plus transactions. Which was unprecedented in terms of that, or not unprecedented. I do think it was potentially unprecedented because I haven't heard of any application that amassed this amount of transactions on a testnet. So very proud of the team on that. But we were not expecting this much load. We have been doing before that different stress tests, especially how to manage many proofs coming in. But we were not testing for such large batches, for example, because we are batching together transactions. If they arrive at the same time, there's multiple transactions going into one zero-knowledge proof. And we were not expecting this much load. So we were, in that sense, maybe quite pessimistic of what load we need to handle, and that broke our sequencer design on testnet. We're able to wrap up the testnet campaign completely with a couple of workarounds. And our major goal since then was to finish reworking the sequencer so that we believe that it can handle these larger loads. And second of all, to do the stress tests. So now we have specific data. We don't do another campaign because it was quite a big campaign and we put quite a lot of strain on our pool community moderators because there were so many tickets being opened. But now we know exactly what real world data looks like. So we are continuing to leverage what happened on testnet to test out that the sequencer is functional. Our target is to arrive at least at a 99% uptime. But if we arrive at 99% uptime, we think we are ready to launch the protocol. And obviously after that, the goal is to have an uptime as an RPC provider, as a top RPC provider. Our sequencer is not an RPC, but it's similarly important. So after that, our goal will be to have 99.99% uptime on operations. So right now we are in the in the testing phase. Last week, we already have been hitting our contracts with scripts to determine how well we can handle it. And we are also now extracting the data to determine what is our uptime, actually. So we also had to devise what methodology are we following there. So right now in the journey, once we are confident that the sequencer can handle the load on mainnet without interruptions, which is very important. We are talking about people's actual funds here. In terms of a DeFi protocol, we need to provide that high uptime, even though we will provide a guide and an option for self-sequencing that is going to be slower and more suitable for withdrawals. So our sequencer uptime is the main benchmark to determine when we are ready to launch. But I expect these tests to go on 2, maybe 3 weeks. I'm hopeful for 2 weeks. Let's see.
Yep. Okay. Well, hope it all goes well is really all we can say, Barna. For those that want to keep up to date with what you guys are doing at Mendy and track that progress towards mainnet, what is the best way for people to do that? What should they do? Where should they go, Barna?
Yes. So generally they should just follow Malda _XYZ or our official X profile for official information. That's where we are communicating potential official dates. For launch, that's where we are going to announce our launch. So that's a great way to keep up. They can also follow myself as well. I usually aim to share more technical or space-oriented thoughts and information on my personal X profile at real Barna Kiss, which they can also follow for more information. And then they can also join our official Discord server, where there are a lot of conversations and a lot of community that are very eagerly awaiting launch as well, as you pointed out. And then we also have an official Telegram channel where they can receive updates if they prefer to use Telegram for their daily crypto news.
What is the website? Just one last time, Barna.
Yeah, it's malda.xyz. That's where people are able to access the testnet application, try it out themselves, and find the full application once it is released in the coming weeks on mainnet.
Got it. Thank you so much, Barna. All the best, and bye for now.
Thank you very much.